The real question.
The real question.
The real question.
Welcome to The Real Question, a podcast where we cut through the noise on money, property, and financial decisions that actually matter in your life. I'm Leigh Deledio. Let's get to it. Joining me is Paul Nelson. Hello, Paul.
Good morning, Leigh. Great to be here.
Good stuff today. The real question is, and I think it's not the first time someone's asked this, but with 75% or 80% of people using a mortgage broker today in this day and age, the question is, does an actual broker make a difference in terms of which you choose?
Yeah, it's a great question too, isn't it? I think it's really, really important. You're looking at a 25 to 30-year relationship on a mortgage. It's often more time people spend shopping or choosing a phone than what they do on a home loan. A phone lasts, 2 to 3 years now, and you've got to throw it out.
Yeah.
Shopping, clothes, although my clothes last 10 or 15 years, most people don't wear them that long. It's certainly relevant. You're looking at a 25 to 30-year relationship. Long term, the amount of interest you pay back on a loan is now double. It's about 2.2 to 2.3 times the actual loan amount that you actually borrow. So is it worth choosing and getting the right person, the right broker to be able to do it? Yeah, absolutely. I think it's absolute paramount.
Absolutely. And I think we've got 5 sort of bullet points to sort of cover off and take you on a bit of a journey here. But I mean, I think the first question to ask any broker is, do you proactively review my loan? Not when rate changes and not when you call, but basically have a proactive approach on an actual schedule. I guess the bank is not going to call you and say, hey, we've got a better rate at the moment, or we've got you on the wrong. Yeah, we've got you on the wrong rate. I think the bank's job is to make money, and that's crucial. But I think the broker's job is to make sure that they don't take too much of it from you. And I guess one thing we've done, and this is not to sort of take away from a sole operator, but the one thing for us is we did 5,074 reviews last year. In the last 12 months, 5,074. We've been able to identify about 838,000 in savings for our customers.
Massive.
Yeah, which sort of equates to about 69,000 in interest we're finding in savings for our customers and clients a month.
Yep.
So I think that's probably the start thing. Is there a proactive schedule?
I don't think the sole broker has the capacity to be able to do the whole thing. And anyone that can, is amazing. It's not about getting the right broker or the wrong broker. It's getting the capacity to be able to make sure that everything is covered in a loan. When I first started, and you were the same when you first started your own business too, Leigh, that we did loans and set and put them on a great rate, but times change, life changes, RBA moves, everything changes and rates fluctuate and decrease. You get a discount off the standard variable rate for the life of the loan. Now, if that discount initially was 2%, sounds great at the time, but in 12 months, 2 years' time, you should be getting 2.4 to 2.5% discount. So your rate should be lower, but the initial loan you wrote still stays at 2%. So having a rate review automatically through a channel and a broker channel that has the capacity to be able to do that automatically, that a sole broker potentially won't have the capacity to do, is really important. So when we got our business in year 3, year 4, what we had to do was focus on the retention, making sure that our existing clients' loans were on the best rate. The only way to do that was to be able to employ someone to do that time, effort and energy, because as a single broker, I didn't have that time to interview the client, see the client, process the loan, make sure it's approved, sign the loan document, settle it, yet alone a construction piece in it, et cetera, et cetera. So it was just the capacity wasn't there to be able to do it all.
So the question is, does your broker have the infrastructure to actually look after you and not necessarily just settle a loan?
I don't think they actually do. They can't have that capacity to be able to do it. Certainly not. I know I certainly didn't, and I'm not saying that I got it right. There's a lot of things that I learned along the way. Mate, that's the biggest thing, and I still say that to all my clients. The best thing I will do is I will try. And I still say that now, which is weird. It sounds like I'm a little kid in school saying, hey, the one thing I promise is I'm going to give this a crack for you every single time. Some of the results you get is a wow, but as a single broker to be able to do and cover the whole thing, you just don't have the capacity to be able to do so. So to have the infrastructure that we've got now, I had great infrastructure with the business, but at UFinancial, the infrastructure is next level again. Some of the emails that I get from clients with their retention loans being reviewed and rates decreased, and the clients get the email automatically, and you just sit there and go, wow, that client's, what a great experience. And the amount of money that we're able to save, even if it's a small amount now. We did a rate review yesterday, quite literally on a loan review, and rate reduced from 624 down to 609, I think it was. It's just unreal. It's a great experience, and it's done automatically.
And I guess
the capacity a single broker doesn't
Yeah,
have.
I guess there's other complexities to reviews as well, is that there's so many life changes. So a lot can change in even over 12 months, and people can have an investment loan and then decide to move into that property, and it turns into an owner-occupied or principal place of residence, and obviously there's a rate reduction there. So it's always just having something that's the infrastructure and something that's systematic that continues to happen, and that's where probably the right and wrong broker in terms of the review process, they don't probably have the scar to be able to do that.
It's that capacity to be able to do it. Absolutely. It's reasonably easy to be able to convert that from an investment loan to an owner-occupied rate, and there's a great reduction there as well. Absolutely. To have that capacity to do it that we do here is fantastic.
Paramount. So that leads us into the next point. I'll let you lead off that next point around building a home. That can get expensive fast. So I'll let you lead into that next segment.
Yeah, construction's another whole beast within itself, isn't it? And certainly when I was a sole broker doing the construction, you learn a lot at the start. Not only the documents that you've got to collect at the start of the build, you learn then all the progress payments, making sure that the client is up front and aware of all the progress stages, how it works, what happens at the end, the valuation, then the final payment, handover. In that last stage, it's 5 to 7 working days. It's not, as the builders think, great, let's do the final inspection and we'll get the keys in 2 days' time. Yeah. The banks don't have the capacity to be able to do it that quick. So it's setting that expectation around it as well. It's certainly something now with the budget announcements, with negative gearing, Leigh, that's going to be more paramount moving forward. Construction loans, we're going to do more of them before. It's funny when we're up and going. Yeah, from investors as well.
That's what we're going to see. Yeah.
Mainly investors, 100%. The owner-occupied will come back in. Cost to build has also increased, yes, but from a negative gearing perspective, if people are after an investment property to offset their income, then the negative gearing, the only way to do it, one way to do it, is to be able to build a house, buy a block of land and build a. And a lot of the buyers agents now are already shifting their focus and promoting. What sort of property do you want? Do you want something that doesn't give you the offset of your income, and buying in a town that's already got the infrastructure? Or if you want to offset your income with negative gearing, then you've got to buy a block of land and build. Yeah. Where do we go? What does it look like? How does it work? Understanding that construction process and being able to explain how it works, super important, because there is a bit to it.
Which leads me into circling back on then going down the path of what the suggested property type is. But I wrote down two things. The two risks that nobody talks about when it comes to construction, and the risk one is paying too early. You pay the builder for a stage not yet complete. There's no recourse and money gone. And I've been in that position myself about 10 years ago, where the builder actually went bust, but he took a lock-up claim, and that caused me nothing but grief. So that's one critical component. But then the risk too is paying too late, obviously, because you're either renting or you've got another interest expense, that house you're currently living in while you're constructing, or it could be investment. You need to get a tenant in and get some return, but you hold up those drawdowns, and basically the builder's clock's ticking. Time is absolute money in construction. So someone, and again, this comes back to a capacity question, but someone needs to be across those milestones, those inspections, timing, and it's not a side task, is it really?
No, it's not anymore. And a lot of the time now, clients need to sign the actual invoice before the builders will make, before the bank, will make the payment to the builder. That's obviously, once upon a time, you used to be able to send it all off electronically and do it. Now it's not. They've got to wet sign the invoices now. From a bank perspective, they brought that in just to stop fraud, which is great, but it slows down the process. Certainly paying too late's a big one too. Not only is it costing the client extra interest on the loan because it's ticking, they only pay interest whilst the build increases and goes through the stages, so it's not a big payment up front. But certainly there's that cost to the client, but also to the builder as well. Time, effort and energy has got to represent something for them. And if it's late, often they stop until the payment's made and then they pick it up again.
Yeah.
So it's delaying, paying extra interest for the client, delaying the builder, costing them money as well. And certainly being across it is paramount. Yep. So it's got to move pretty quickly and freely, and explaining to the client and the builder as well the process. We work really closely with our construction team, making sure that the builder's in constant contact and the client, and the email goes out to both parties. A single broker to have that capacity to be able to do it and be fully across it, it's a hard task on top of everything else that you've got to do. So to have the capacity that we have here to be able to do it, and the knowledge that we've built over a long period of time, things can happen, but gee, we're right across it at the forefront before it happens.
This isn't about whether we as a business have resolved those issues, but I guess it is ask your broker, who specifically manages my progress payments, because it is a big job, and a lot of the bigger groups, the broker groups, would now have someone that's specifically or a progress payment team to be able to facilitate that. And I think that's the key.
Comes back to the capacity, doesn't it?
So that sort of leads us, Paul, into that next thing. I guess you've got 80% of home loans, investment loans going through brokers. So the broker who does one thing versus the one that does sort of everything. And I guess that leads me into 13% of the broker market are active in sort of asset and commercial finance. So this says to me that basically most people with a mortgage broker don't use them for either a car loan, a business lending, commercial finance or facility. So they go to go to the dealer, the bank, or whoever's actually easiest. So I guess your broker already knows so much about you, your income, your goals, your financial information, your debt. So why start it from scratch for somewhere else?
Yeah, correct. Absolutely. It's 13% of the 80% that are proactively needing some form of asset finance or commercial finance, whatever it looks like. Your broker's already got all that information to be able to pass it on internally within the same team. Speeds up the process, and I certainly know with the asset team and the commercial team, if they're really fluent, it's a seamless operation for your client, which is what it's all about at the end of the day.
Less friction.
Absolutely. That single broker capacity, again, gets tested, doesn't it? They don't have that inbuilt mechanism to be able to cater for that. And as you said, we've got all the client's documentation already in the system, that with the client consent we can pass over, make it seamless, one call, what are you after, and bang, that it's already done for them, really quick and easy. And as you know, 30th of June deadline comes around, and there's asset finance people looking at tax savings as advised by whoever they're advised by to be able to do so. And some of it's got 2 to 3 days. Having already the information to be able to get it done in that period of time is not an issue at all, and it happened a couple of times this year, which is a great outcome.
Yeah, absolutely. I mean, you got your car loan. Everyone generally at some stage has had a car loan.
Fortunately,
great if you could use liquid to pay cash, but I mean, we've got small, medium enterprises that need small business finance needs, or have business finance or cash flow needs.
Yep.
And then you got your mortgage, and they're all connected. And I guess the key to that is that your broker should be really connected with all that too. And it's whether it's connected or whether you've got the ability or different teams and departments that handle and specialise in that. And I think that's sort of, it's not about, I guess, selling more products, but it's not, for me, the real one is it's not having to repeat yourself to 5 different people.
Yeah, absolutely. And we've all been in that same position, haven't we, that we go to the bank, we get a home loan, then you go to a different bank and get a credit card, or you go to a different bank and then get a car loan. It's the same questions 3 times over. And I'm not saying that anyone's got the capacity to do all 3, but it's that same repetitive. Your broker, when we catch up and look at the home loan, we've got all those documentations to be able to pass it on. So it's fluent, quick, clean, easy. And the end result is a good one for the client, and that's ultimately what you're after. If you want ease of operation, then certainly that scalability is really important when it comes to making that decision. Comparing rates or monthly repayments, whatever you want to do in the asset part of it is really important. But if it's quick and easy and seamless for the client. That's what everyone wants. We're all time poor. Everyone's busy. Each person's busy is different to the other person's busy. But to break it down and make it simple and easy for the client with a great end result, that's what we're after, yeah.
Yes, exactly. So the question could be that to the broker is that, do you have additional services or other finance offerings, all encompassing, less repetition,
Yeah,
and less friction.
Yeah, which brings us to the next point, Lee, too, doesn't it? Where your data, your documents, and who's protecting it all. Thinking about a mortgage broker, what we collect to be able to do the loan. You know, we collect pay slips, tax returns, ID documents, credit card statements, whatever we need to be able to do the loan to put the client in the best position. There's a massive amount of information we collect, personal, private information that we collect from the client. Sometimes we get tax returns still with tax file numbers on it, which is your own personal ID. There's nothing more important than your TFN number. Clearly, we've got to remove it before we send it all on, but we still collect all that data and information. Essentially, everything that a fraudster would love to get their hands on, we collect, which is pretty scary when you sort of say it like that. The question really nobody wants to ask or does ask, how important is that information? How is it stored? How is it protected?
Exactly. And I think that, cybersecurity isn't just an enterprise problem, really. It's really hitting these small operators hard because, you've got a solo operator, laptop, shared drive, basic sort of security measures, basic email. It's an absolute target at the moment. And I think the one thing that we've been trying to do, and not too many people have heard of it, but it's called an Essential 8. And it's Australian government's sort of baseline framework. And I think there'd be many small businesses that would even come close, and that's something that we as a business, and I know the bigger broker groups are actually working towards. And I think, so we have the right operation, and the bigger groups do. They sort of have more dedicated infrastructure, active monitoring, maybe some staff testing to make sure that they're upskilled in terms of being able to identify things and fraud measures in place. But because it's not just it's the gone are the days. It's just not just a password policy. It's simulated phishing that we need to do, attempts, system audits and everything else, and the full works. You wouldn't go to a cafe and just leave your passport on the table, but you sort of hand over 100 pages of financial information to your broker.
Absolutely.
And if you're handing all that over to someone with no idea how to store that and protect that, then, that's an issue.
The storage part is obviously, I shouldn't say the easy part, because we all have a shared drive or a OneDrive or whatever brokers use to be internally. And a lot of it now is two-factor authentication to be going into it, longer passwords to make it harder and harder. But it's also storing that to make it as bulletproof as you can to be able to do it. And as a sole broker, that is represented by a large cost. I don't assume or know what UFinancial do and other bigger brokers practices do, but I know spending more money and time, effort and energy into it is certainly paramount for the client, and it's a minimum expectation that they have that is what we do. But I reckon when you talk to more other brokers, some are actually not doing much at all apart from your basic two-factor authentication or your email protected. They won't be able to get into it because they won't be able to hack my password. That's what they love, isn't it?
Oh, absolutely. I guess the key to that is that, your smaller type operators, they just can't access the infrastructure at an enterprise level and the like. So, and that's not saying that there's all good intent, because we've been there ourselves. But it's just, if there is a question out there, against that broker, then that is a serious question. Cybersecurity and security of your information is actually absolute paramount.
Yeah, to the point of firewalls, to the point of Wi-Fi, limiting access to a lot of things, to the two-factor, to the security, to the longer passwords, to the minimum expectation of what the government expects us to be able to do. It's a big space now, and it's really important. And as you said, going to a coffee shop, you wouldn't put your driver's license or passport over the table and leave it there and hope they look after it properly. You need to make sure and certain. It's a great question to ask your broker. What preventative measures and storage capacities do you have to get my information protected?
So moving on, I think, Paul, when you look at the life of a loan, it's 25 years, and I don't know what it's like at the end of those 25 years because I haven't been there quite yet. But a mortgage. In any mortgage, investment loan, home loan, anything, and it's not a transaction. It's basically a 25-year plus relationship, and you probably have more than just one loan. And if you're like the Australians with appetite for property and other investings, you access equity and take out another loan. So your life will change, your income will change, your family goals will change, all of it. There's things that come up that you totally unexpected, knowing that as a father and the likes. But so your broker who settled your first loan might not be around for the 10th, and I think. So solo operators, even maybe, and we've seen it now, they're starting to move into a lot of them that are around in the early stage, the infancy stages of broking have sort of started to retire as well, and those change, burnout, get sick sort of thing. So I guess, if you're choosing someone for today's loan, I guess you're choosing who's there when things get complicated as well.
Yeah, absolutely. 1999 was the first MFAA accreditation I took on, which is a long time in the industry. I still continue to learn because the 8-ball changes the entire time. Stuff that we did 20, 25 years ago is no longer relevant anymore. Credit policies change massively. But it's also important as well that, when you do become a little bit older in the tooth, training someone as well to have that same experience and leverage off that so that it's seamless for the clients that in 5, 10, 15, 20 years' time, whenever we decide to wind down or to retire, fancy word, or get to the end of the loan term, which would be a wonderful thing, as you said, that there's a support network there to be able to pick it up seamlessly.
Yep.
Absolutely seamlessly. So from the client perspective, the person that comes through picks it up, knows the client, dealt with them previously, has leveraged off the skill and ability of the broker and just carries it on for the next 25, 30 years through the next investment, lifestyle change, whatever the case may be. Their kids, when we get referred to their kids, it's great, but they're 25, 30, whatever the case may be, 20 years old, buying something. By the end of their loan term, I pray that I'm still not working at that point in time. But at the same time, it's important to know that they're going to be well looked after as well, and having that structure moving forward to carry that forward for the 25, 30-year journey is really important, isn't it?
Yeah, and I think not every broker has seen every situation too, and I think this is really important. So for the larger broking groups, in terms of having a network of brokers, enables also the ability to be able to share information and share results and things that are working. So I guess experience just isn't about the years in the game, but it's it's a range of scenarios as teams navigated together.
Yeah, absolutely, and I reckon that's across every industry as well too, Leigh, like plumbers, electricians, etc. What the older person has learnt and gained over a valuable period of time. And I was recently talking to my plumber, and they said exactly the same thing. Old plumber would love to do it this way, young plumber does it this way, and somewhere in between they worked out the actual best result between the two. And I reckon that's a great narrative to be able to use. It's exactly the same in our industry as well. Those complexities now that we have, that we gain valuable experience over a long period of time through tax returns, multiple companies, multiple trust, sole trader, to be able to read them and understand them and know exactly what it is and pull it apart in 2 to 3 minutes is a skill, and it takes a long period of time. Very lucky where I learned in an accountancy business, so I learned to be able to read tax returns really quick, really easy, and kept asking questions, and I thank them for their time over and over again. But certainly understanding that skill set that you develop over a period of time, you don't develop that within 12 months to 2 years.
No, and I think we're getting harder scenarios. I mean, you only have to look on the back of the budget, and people are not even navigating all those new changes can be so difficult. And I think that's where it sort of also leads into having more. And it's not necessarily where you have a business where it's mandated that there's financial planning, accounting, and other service offerings. But I think the key to it is that broker network has that infrastructure to be able to lean on and be able to seek information really quick to action from a client or a customer point of view.
Yeah, absolutely.
So I think that can really help too, having those harder scenarios to get solved by the team around you.
Yeah, I was asking our financial planning young Tom and a question the other day around financial planning. What does it look like with the debt recycling and pulling that apart? And then I was able to relay that back to the client really quickly. And obviously, there's skills that we can lean on in-house really quick. Again, it's that capacity test as a sole broker to be able to do it. Finding the right person, getting the right questions and answers as quickly and conveniently as they possibly can. And it's a skill set that you do learn over a long period of time. It's just not a quick, and then when you think you know it all, the 8 ball changes again, doesn't it?
Absolutely, yeah, it does.
And it's continuing to grow, learn, develop, educate. It's really, really important. I think educating the clients has been a key. 15 years ago, it's a fancy buzzword now that everyone's educating. It's like, well, that should be a minimum standard now.
Absolutely.
To have in-house or brokers that are able to lean on and leverage off other financial planners, accountants, asset team, whatever the case, in-house, and make the process for the clients quick, easy and seamless is more paramount now than ever before, I reckon.
Absolutely. I think wrapping this up, Paul, the real question was, is there a difference between choosing the right or wrong broker? And I think, I trust your broker. Great, that's a minimum. You've got to have that trust and that customer experience, and they communicate well.
Yep.
I think trust alone doesn't necessarily review your rate proactively. It doesn't manage progress payments to ensure that those risk factors that I talked about earlier are covered. It doesn't protect your data, which, to have that infrastructure to make sure data is correct is absolutely paramount. And I think trusted and capable, trusted and resource, and trusted and still there in 15 for years. So I think finding someone that you sort of trust is easy. I guess finding someone who can back that trust up is the real key one here.
Yeah, fully agree. And all those points that we covered are all relevant. You would trust the person you write the loan with. You would trust the broker you write the loan with. That's you're not going to do the business if you don't. And especially when you're looking at a 25 to 30-year relationship on the home loan as well, or the investment loan or loan term, whatever it is. Clearly, hopefully that loan term gets less and less, and part of being a good broker or a great broker is explaining everything to the clients, budgeting, cash flow, developing a skill set that we spoke about before that is developed in-house and talking to other people to lean on and leverage and continuing to educate. The biggest thing that we do now is still educate ourselves. It's important to keep up with all the changes. The 7 questions we've got to finish off to ask your broker that we believe is really good ones. Do you proactively review my loan?
I guess, yes. Not when I call, but do you proactively review my loan and regardless of whether or not I reach out?
So automatically?
Yes.
Who manages my progress payments?
And I guess, and is that a dedicated and specific role?
Can you help with asset finance, commercial or business loans?
Yeah, and again, also, and not just home and investment loans, yes.
How do you store and protect my data?
And I think the key one is, what's your cybersecurity posture? What are you doing and what infrastructure do you have?
Yep. What happens if you're no longer available?
Who picks up the phone? What support mechanisms do you have in place, especially because it can be deadline stuff. Yep.
Yeah, finance clause and settlement dates don't go away, do they?
Yes.
What technology are you using?
Technology is important. Obviously, there's a lot of friction in the process with finance. So, what technology are you using only to fulfillment, but also across lending, rate, and other opportunities. Yeah.
And what do you have around you?
Yeah, and I think that's a really key question because it's not about having mandatory other services, accountants, planners, specialists, other specialists around that broker. It may be that they have a really good relationship and collaboration with someone, and that's important, but it's a good question to ask and finish with. Whilst I don't think it's the most critical of all the others, I definitely think it can be bigger than a loan and having that. The industry is sort of moving to a more holistic approach, and the best brokers aren't just good for home loans. They're well connected.
Thanks, Leigh. Enjoyed
Thank
episode 2.
Well, thanks, Paul. Your mortgage will outlast your car, probably your job, maybe even your relationship. But so I think it's choose accordingly. And that's the real question we've covered in episode 2. If it's made you think about a little more broadly about who's in your corner, share it with someone who needs it, rate it, review it. We'll be back next week.